Hey guys, it's Andrew Keene from KeenOnTheMarket.com. We're going to go over the HIM Cribbit trading plan for Adobe. When I look at Adobe, the first thing I always look at is the chart. At first glance, we look at the Ichimoku cloud, which is comprised of the Ichimoku cloud and the Taken sign and the Cajun sign. At first glance, the Ichimoku cloud shows me that the trade is setting up a bullish setup here. If we're trading above the Ichimoku cloud, that is bullish. If we're below it, it is bearish. We should get first levels of support on the 9-period, not 9-day. 9-period moving average. Then we should find more support at the 26-period moving average. This is time-weighted moving averages, and the cloud shows us in the future patterns, okay? So this is the most, unique technical trading term. Works very, very well. So let me go over the HIM Cribbit trading plan for you guys in Adobe, ADBE, and I'm going to talk about 4 possible ways to trade Adobe for earnings. So let's go over Adobe right now. Adobe is currently trading at 40.64. So Adobe is trading at 40.64. Okay, historical movement. I always look at the historical movement over the last 8 quarters. So historically, how has the stock performed on earnings? I compare the stock market to a lot of different things. One thing I compare it to is the sports team. If the sports team is winning, I want to be betting on them. If the sports team is losing, I want to be betting against them. So, historical movement over the last 8 quarters. How has the stock performed on earnings? And Adobe, it's pretty neutral. It's gone up 4 times, it's sold off for 4 times. So we're going to the proprietary software. So it's up 5.7, up 4.3, down 2.7. Down 3.9, up 6.6, up 1, down 6.2, and then down 3.6. So the stock has rallied 4 times. The stock has sold off 4 times. How do I look at the April at the money straddle? So the April 41 straddle is implying a $2.60 move. So it's implying a $2.60 move. $2.60 divided by 41 gives me a 6.5% move. So they're implying a 6.5% move. I can look at the move either on how much they're implying, or I can look at it as a dollar value. 2 measure move targets. I'm going to have an upside measure move target of 41 plus 260, which is going to be 43.60. Downside measure move target is going to be 41 minus the 260. Is going to be 38.40. And when I look at this, I'm going to play it differently. I'm not going to say a trade. I'm going to talk about 4 possible ways to trade Adobe. So I'm going to change it and mix it up a little bit. Andrew Keene's 4 ways to trade Adobe. It's like choose your own adventure almost, right? So 4 ways to trade Adobe for earnings. So this is 4 different ways. One's going to be buying movement. One's going to be selling movement. One's going to be buying, getting long, and one's going to be getting short in Adobe for earnings today after the bell. So the first thing I always look at is buying movement. Let's say I said to myself, hey, you know what? Adobe, I think the stock is going to make a move. It's going to move a lot. It's going to move more than that $2.60. What would I want to do? Well, I could buy the 41 at the money straddle, right? Buying a straddle is buying volatility, buying gamma, buying movement. And let's say I did this for a $2.60 debit. So I could do this for a $2.60 debit. My risk on this trade would be that $260 per 1 lot. So my risk on this trade is $260 per 1 lot. My reward on this trade, in theory, is unlimited. Anytime I buy calls, my reward is unlimited. Break even of this trade, we're going to have 2 break evens of this trade, and I just talked about this, 38.40 and 43.60. Number 2, if I wanted to sell the movement, okay, sell movement. if I looked at Adobe and I said, hey, you know what? This stock has not moved 6.5% at all, right? What could I do? Well, I could set up a situation where I sell in condor, okay? So I could sell the 43.44 bear call spread and sell the 39. Actually, let's try to see if I can get the switch this up, and we'll move these up. Sell the 44.45 bear call spread and sell the 38.37 bull put spread, okay? So selling a call spread outside of the measure move target, selling a put spread outside of the measure move target. So let's see what price I can put this on for. So what I bring up is I bring up my option montage and I price this out. So in Adobe for earnings, I want to sell it out of the money call spread and sell an out of the money put spread outside of the measure move targets, okay? So I'm going to actually exit. I'm going to enter this one here. So I want to sell the 38.37 bull put spread, and I want to sell the 44.45 bear call spread. So selling a bear call spread, selling a bull put spread in Adobe for earnings outside of the measure move target. And I look, I'm not going to put this one on. It's 24 at 28. So let's say I could put it on for 26 cents, okay? Let's say I could do this for 26 cents. I would get a 26-cent credit for this. On this trade, my risk would be $74 per one lot. My reward on this trade would be $26 per one lot. My break even on this trade is going to be $37.74 and $44.26. So on this trade, I could set up a strategy, and the best thing about trading is I can set up a strategy where I can make money if the stock moves a lot, doesn't move at all, or whatever I want, right? So on this trade, I could set up a strategy where I make money if the stock lands anywhere in a $6.50 range. If the stock lands in a $6.50 range, I will make money on this trade. Okay? If anybody has any questions as I go through this, you guys should be asking questions. Next trade, if I was bullish. If I was bullish, what would I want to do? Well, when I bring up the chart here, right, it has to break through this $42 level. So let me bring up the chart here real quick. And 42 is upside resistance. So if it broke through 42, it could see 44 in a heartbeat, right? We can bring up a Fibonacci level. Actually, from the low here, 37, you can see 47 pretty quickly on a measure move target up to 47. So if I wanted to get long, I would just buy a $2 call spread, but I'd want to buy the 42 strike. I'd want to buy the 42 strike. So let me bring this up real quick. So I'd want to buy the 42, and let's see what strike I'd want to buy. Maybe the 42.44 bull call spread, okay? If I price this out, it's around 50 cents. Risking 50 to make 150. I think it's a good risk versus reward setup. So buying the 42.44 bull call spread. See, great minds think alike. So buying the 42.44 bull call spread in Adobe. If I was bullish, I could put this on for about 49 cents. Let's talk about this one here. If I was bullish, I could buy the Adobe 42.44 bull call spread for 49-cent debit. On this trade, my risk would be $49 per one lot. My reward would be $151 per one lot. My break even on this trade is very easy. It's a lower strike option plus the price of the spread, $42.49. Okay. Number 4, if I was bearish, what would I do? Well, I'd go back to my chart. Where is there support to the downside? How far can it go down? Okay. The Ichimoku cloud is the final line of support, so it could get down to this 38.40 level, which is exactly our measure move target to the downside. So if I was bearish, I would buy the 40.38 put spread. Okay, 40s where it broke to the upside, so I'd buy the 40.38 bear put spread. Okay, I would buy the 40.38 bear put spread, and I could probably do this for around the same price, around that 50-cent level. Let me bring it up. This would cost me 58 cents or $58 per one lot. So 58-cent debit. My risk on this trade would be $58 per one lot. My reward on this trade would be $142 per one lot. Okay, I have a break even of this trade is going to be $39.42. So this is 4 ways to play Adobe for earnings: bullish, bearish, buying movement, and selling movement. 4 ways to play movement on earnings: bullish, bearish, buying movement, and selling movement. Does anybody have any questions about this trade? Does anybody have any questions about this trade?